Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still remains on the back foot since recently rejecting the top side level around 73.65. After inking in a 73.66 high after the close of New York, the market is backed away and still poses a downside threat, which could see a move back towards 72.75 and reassess as 72.25 is where I believe the market may be heading, where the short-term base is. A buckled RSI and also a weaker MACD does support this case. The euro took the challenge to the top side of 110.90 to 111.15 overnight, rejects and still remains somewhat negative. With the RSI somewhat buckled, we do need to keep an eye on the support, and that is if we see a move further to the downside, a break around that mid 109 could even see a further slide, and with the base holding around 107.50.85. In light of the pattern, and also with the dollar increasing overnight, I do feel the euro bears, that is, will continue to weigh on the support. It would seem there is a short squeeze in play for dollar yen after breaking above the 116.35 level, and now looks for a short squeeze to 116.70. I feel the market will probably run out of steam there, considering the 5 bullish days or candles that have been keeping this up trek may soon see some profit taking come back into play. Sterling has backed away from the top side of 132 and now looks towards the support level at 130.60. In light of the RSI remaining under the midway point does give some concern that we could see a further stop loss play. That is, a break of 130.60 could open a way back towards 129 area. So do keep your eye if you're trading from the long side. Nevertheless though, there is a little bit of divergence here, so it really depends on how well the support level at 130.60 holds. This in turn sees strong divergence coming through to the bull case for sterling Kiwi, and that is over the overnight descent could see a rebound off this level around 190.25 and look up towards the level of, still believe, of 194. With this divergence kicking in, let's see if the bulls are attracted to this pattern and elevate the market higher. It would seem since the strong rejection from that top side above 2000, the market still remains somewhat negative for gold as it buckles and breaks through the midway point. And keeping an eye on this MACD, we could see a further weaker play. The support level seen at 1,960, if broken, could actually see a move down to 1,940, but even lower. It's very hard to put some kind of base to this break due to the recent extension that we've seen here that began around 1,780. Finishing up with oil, well, the market is also playing a bit of a heavier side since that top side rejection around 125 and plummeted $25 on Wednesday. I'm looking for a break of 100, and if seen, should ignite the move to the downside as the two technicals marry up. That is the RSI and MACD. We could see a drop towards the region around $90 to $94 a barrel. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.